A road to nowhere, stretching 32 kilometers from Shanghai into the Pacific Ocean. The Donghai Bridge, the third longest in the world and a modern miracle of Chinese infrastructure investment. At the end of the road, another world beater, Yangshan Deepwater Port, soon to be the largest in the world, through which an estimated 15 million containers will pass every year. But not much moving today. Since the economic slowdown started, China's factories have been hit hard. Exports have slowed to a trickle, and containers full of goods sit on the dock as their carriers ride their anchors off the coast, waiting for orders. But the shipbrokers are seeing another trend. After a decade of sucking up all the natural resources the world has to offer, China has stopped shipping in raw materials.
Before we had about 10 million tons a month being shipped from Brazil, and nowadays we probably have less than 1 million tons. So it's basically come down to a halt. The ships are being laid up, they're at anchorage, waiting for cargoes to be bought by the Chinese steel mills again.
Here on the mouth of the Yangtze River, those steel mills have drastically slowed production. This is the gateway to China's interior, and if nothing's going in, very little will be coming out. Signs of a global slowdown aren't just affecting China's manufacturing export industry. Growth in primary industries seems to be slowing too, the growth on which China's future depends.
If the government had not got involved and announced a bailout of 4 trillion renminbi, then China's heavy industry would have been very badly affected.
The Chinese government bailout plan is mainly to be spent on infrastructure projects like the road and rail systems, but many complain that much of the promised money had already been allocated and that only about a fifth is new. And genuine growth needs to come from the Chinese consumer. The auto industry, once seen as the last growth market in the world, has dropped away, leaving shiny new models stacked up on the factory forecourts. But China has one ace up its sleeve, nearly $2 trillion in foreign currency reserves. Could that save the world from financial disaster? The Chinese banks, unlike their counterparts in Europe and America, have considerable liquidity today. And it's perhaps ironic that communist China is being asked to bail out capitalism in the West. But this is a city that has seen China move from capitalism to communism and back. And as the clouds gather over China's economic future, it'll be a practical, not ideological solution that the people here will be searching for to help them ride out the upcoming storm. Tony Cheng, Al Jazeera, Shanghai.